Hey everybody, this is Lorelia. Welcome to another episode of the Never Lose a Deal podcast. This is the place if you are a real estate investor who is looking to leverage creative financing to build wealth. And so today I'm coming to you to continue my series where I go more in depth with asset-based lending and investor loans. So today I'm coming to you with a case study on a DSCR loan. And so I am going to be doing this case study by pulling up a listing from my local market here in New Jersey. Now, of course, a lot of things have been hidden because I do not personally know the listing agent, but it is online. So, what I'm going to do is I am going to share and give you an idea of what it would look like for you as an investor to be able to leverage an investor loan such as DSCR and how you would apply this analysis to whatever it is that you want to do if you do want to leverage a DSCR loan. So let's get into it. So, what I'm going to do is I'm going to share my screen. Okay, so there we have it. What I'm going to do now, I'm going to pray that this is going to work out. Okay, so it looks like I'm still on. So as you can see, this is, like I said, here in my local market. This is in New Jersey. This is located in Newark. Newark is one of the major cities here in New Jersey. And so this is called a two-family with a bonus. So these are, this is a common house structure, multifamily here in New Jersey. If you've watched my other two videos about DSCR loans, you know that DSCR loans are loans that primarily are with multifamilies where the asset itself is the determining factor for you getting a mortgage. So what a lender is looking at is that a lender is looking at the asset itself in terms of the revenue that it brings in to come up with a DSCR ratio, and then from there to determine if this is a viable deal for them to be able to finance on. So, of course, I broke out numbers. Like I said, do not personally know the listing agent, but I had to do some research myself on being able to get the rental income and what have you. So, like I said, common structure here in New Jersey, where you have the lower level is a first floor, second level is a second floor, and if you see here on the top, that would be considered a bonus, because I guess in terms of the legal structure of the city, it is not considered a three family because it may not have a separate interest as well as a way to I guess the way I would put it is it's not separated from the second floor unit. So pretty much the second floor must flow into the third floor. So like I said, I haven't seen the unit, but this is an example of what it would look like. So as you can see, I have the rental income per unit. Unit one, 1950. That's how much it would be per month. And unit two would be 2100. So I know you're wondering, well, Lorelia, how would you know this if you don't know the listing agent and you haven't seen the actual investment property? Of course, you can get this information online. There's plenty of rental websites out there that will give you what would be the rents in that area. So these are conservative rents. Now, of course, if this was an investment that you were looking to purchase, then of course you would do your due diligence by asking the listing agent what are they currently getting for the rents or what have you. But the reason why I'm sharing with you this case study is because this is the due diligence that should be done before you decide to talk to a mortgage broker, a loan officer, or what have you, who can assist you with doing to provide you with the financing of the DSCR. What I find is that a lot of investors, they do not know the economics. I talked about economics of the deal in the last video where they don't even know the economics. So it would be an example of what the economics will look like. So I just went over the rental income, and these are some of the DSCR details. Like I said, there's plenty of DSCR calculators online. If you go on Google, you just put in DSCR, it will actually ask you all this information. So you can literally run these numbers yourself so you can have a more viable conversation when you are talking to someone who can finance your deal. So, listing price, as I said, $500,000. I talked about that in the last video in terms of numbers here in my local market in the Northeast. A down payment, like I talked about that in another video about lenders that I work with. You know, it is very common, 25%. So, like I said, being very conservative. Of course, everything is negotiable. Could you put 20% down? Could you put 15%? Yes, you can. But like I said, being very conservative. So with a purchase price of $545,000, and then you do a down payment of 25%, that would leave you having a down payment of $136,250. Let me just pause right here. Now, this is an example, and I talked about this in the last video, why you want to be very careful of these online webinars and gurus who sell you on the ability to get an investor loan with no financial statements, no bank statements. You can just get a property based on the value and the asset itself. Does that actually apply? It does, but a lot of people do not understand the context behind that, because a lot of people have been sold on a salaciousness of, oh, I can invest in real estate and I don't have to do no bank statements, and I don't have to share no tax returns, and I don't have to do this, and as long as the property is bringing in some revenue, I can be able to buy it. Well, the thing is that what they forgot to tell you is that you actually have to put some skin in the game. So that is an example of a down payment. So you have a lot of people who sell you online all these fluffy stories how you could be a real estate millionaire overnight, but they do not share those little details. So what I found is that there's people who reach out to me, want to learn more about investor loans, and then what happens is they get shocked at these numbers. Now, once again, I said when I started the series, this is a mature series for the investor who understands that in order for them to build a real estate portfolio and they want to creatively look at other financing tools that they can use. Okay, oh Lord, you're killing me. What is the chances of that? Now I can't find my screen. Where am I at? I don't know where I'm at. I don't know where I'm at. You got to be kidding me. Okay, I'm back. Sorry about that snafu. My phone was actually, somebody is calling me and it went to my iPhone. So let me turn on earphone mode so that doesn't happen again. So back to the discussion. Hey, that is considered technology. So once again, going back to what I said. So it's easy to sell someone on the idea of, hey, it's easy peasy to get involved in real estate, and all you have to do is find a property, and if there's rental income and the property is an investment property and it's producing income, voila, you can become a real estate millionaire by getting an investor loan. And once again, I'm always here to provide context to the content that I'm sharing. So your eyes are not deceiving you. So yes, 25% of $500,000 is 136,000, as you can see. Now, the base loan financing amount, that is the amount that the down payment minus the purchase price. So you would actually be financing the 408,750. Now, once again, with a rate of 7% and a quarter, 125, you would have a monthly payment of $3,349. Now, I want to stop for a second. A person may be wondering, well, really, I don't know if I want to run numbers. I don't know what the interest rate is going to be for the particular deal that I want to do because, I don't know what the interest rate is going to be for from the mortgage person. Remember, you're roughly running numbers. So you want to look at it from a standpoint of, okay, if I was to buy this property and I'm running my numbers, I'm doing my analysis, what number am I comfortable with having a interest rate of? Because like I said, there are a segment of investors who are not interest rate sensitive. They understand the ebbs and flows of interest rates. Of course, if interest rates are low, voila, that's great. But even if interest rates are a little higher, they have a long-term vision of what's ahead. So they're willing to understand that they're not sitting on the sideline. That's usually people who are new to real estate, who's sitting around waiting for the 3% interest rates to come back. They're looking for the bottom to fall out of the real estate market, and then the 2 and the 3% interest rate will come back. Well, like I said, a real estate investor whose goal is to build wealth, which is what the Never Lose a Deal podcast is all about, understands that there are so many things to look at when you are purchasing a property. So they're not going to let interest rates scare them. So this is a rough estimate of what some of the interest rates could be based on some of the deals that I have been coming across my desk with the lenders that I'm working with. And that would bring us to a monthly payment of $3,349. Now, of course, the one thing that I don't have in front of me, and I should have put it in front of me, is that if you were to look at the DSCR ratio is 1.527. So what that means is that every every lender has their own ratio. You need to know when you're working with a lender what is the ratio that they need, what is the ratio that they lend at. So you'll know that if you are looking to move forward and invest in properties, what's the number they're comfortable with. Well, based on this, with the lenders that I work with, a DSCR ratio of at least at a minimum of a 1.0 would be something they would lend on. Now, of course, we have a DSCR ratio of 1.527. So that's a comfortable number. That means that based on the income of unit 1 and unit 2, our monthly payment is less than that. And so, like I said, there's of plenty of calculators online that can help you. Now, my second slide, this slide has to do with what is the estimated cost to be able to close. Now, what is not abnormal is that with a lot of investor loans, there is an origination fee. That origination fee can vary, like I said, being very conservative. I mean, nothing set in stone. So don't be surprised that you see the 2 points, but understand that majority of the investor loans out there, because remember, that's not institutional paper. So you're not dealing with a major bank or what have you. You're dealing with either private equity firms or a hedge fund. And these are separate companies that are backing these loans. So the way they do their term is going to be different than what you would normally see with FHA. So what I find is another newbie mistake is that you have people who they did their first time home buyers workshops. They're talking to mortgage representatives that all they do all day, every day is FHA as well as a realtor. And they don't know this world. So they try to bring in everything that they understood in FHA to the investor world. And so that's where it gets a little different. So origination fee 2 points. We got lender fees. That's fees that the lender, their processing fees for them to be able to do the loan. 2,800. Like I said, I'm doing rough numbers based on what I've seen. Title and escrow fees 3,000. Prepaids, that has to do with any water, sewer, taxes, insurance, and that would bring total fees of 19,200. So let's think about it. You got your down payment, which you saw in the other slide, which is 100,000. You have total fees, which is an estimate of 1,900. And so if you look at the bottom part of the slide, you have out-of-pocket cost of 155,450. Ladies and gentlemen, this is the part of the DSCR loans that your real estate guru does not share with you. They can sell you on how it's airy fairy to be able to buy an investment property where it's based on the asset itself, but understand the financial outlay that is necessary to be able to do these loans. So this is not one of these, how can I buy this no money down? That's not how DSCR loans work. Let's go to the next slide. And then we have other cost reserves needed. A lot of your lenders out there who underwrite DSCR loans, they a lot of times want you to have reserves. So what does that mean? I know your online guru told you that you can just get a credit card and you can just fund your way to a real estate deal. And that leaves a lot of people very confused because there's no context to that conversation. So this is what it looks like. If you hear and if you talk to a lender and they're talking about reserves, this is what it looks like. Payment, interest, and taxes of at least 6 months. They want that to be separate money that's sitting somewhere, as you can see, in a liquid or can be liquidated quickly in some type of checking, savings, an IRA, some stocks, or what have you. A stock account, brokerage account, whatever you have needs to be separate from what you're being able to buy. Because what we don't want to happen, and I know, a lot of people, they feel like, well, I'm just going to just get into this real estate deal with just the smallest piece of money. And then when I start getting the rental income, that's going to be the income that I'm going to be able to use to pay the mortgage note. That's not how that works. So that is why a lot of these lenders who are underwriting these loans want you to have reserves on the side. So I even roughly gave you that number. So at the 3,349 that we calculated for 6 months, $20,094 would have to be sitting somewhere that can quickly be liquidated. Ladies and gentlemen, there you have it. Pretty much showed you if you were to get a DSCR loan on this particular investment property. Like I said, this is in my local market here in New Jersey, 2-family with a bonus. This would be your outlay. What did I tell you in the slide before? That was over $100,000. And then you still have to have reserves of $20,000. Now, there are some individuals who are going to be watching this video and they're going to be blown away by these numbers. They're going to be like, who has this type of capital? Who has this capital? Who has access to this capital to be able to do this? Well, ladies and gentlemen, there are plenty of people who do. Whether they are reselling something that they currently have, maybe in another investment, and they want to move over to investment loans, and I'm going to do a separate video on that can be an investor who literally had an investment property, want to liquidate it, because you do have those investors who want to liquidate their portfolio, and they may want to do a 1031 tax exchange. And so they're going to have those funds and they're going to be looking to park those funds somewhere else because there's a time limit when you do a 1031 exchange. So understand that is what the Never Lose a Deal podcast is all about, creative ways to help you build wealth. So yes, there are people who are sitting around who have these funds available to creatively do deals, and they're not letting the market, the interest rates stop them. Whether they have it in a retirement account, for those who have it in a retirement account, they know, hey, stocks aren't performing that well right now. Is there another viable asset class that I can get into? Well, real estate, it may be, it possibly can be it. So let's have a conversation. So if you're one of those investors who's looking at this case study and you're saying, hey, you know what, I have some money parked away in a 1031 account and I need for it to go somewhere, and I am looking at an investment, a multifamily investment, and I want to, consider some a DSCR loan, some other asset-based lending opportunities, let's have a conversation. Or if you have an investment portfolio and you're not happy with how the market is performing, but you want to park it in an asset class like real estate because at the end of the day, people are always going to need somewhere to live. Let's have that conversation. So once again, ladies and gentlemen, that is an example of what I just shared with you today, a DSCR loan that a DSCR loan, I got it with Blake, that you could be able to do with an investment property with a multifamily. So I know I kind of packed a lot of information in one video plus my screen with Blake, Lord forgive me. But this is an example of what that looks like. So the last two videos, if you either watch it on YouTube or listen to it on the podcast, you can't see the video if you're watching it on Spotify. This is an example of what that would look like because I want to give context to the content that I'm sharing with you. Because a lot of times what happened, I have people who reach out to me, they'll hear a lot of buzzwords on the internet, but they're not quite sure how it works. And so this is an example of what that would look like. What does it look like to be able to apply a DSCR loan to an investment property? So I'm looking to do more of these case studies to give you an example of how these will work. I'm going to go more into other types of asset-based lending, investor loans like portfolio loans, bank statement loans, and what have you, just to give you a full gamut of what is out there, especially for those experienced investors who, like I said, are looking for ways to be able to capture a lot of opportunities in real estate, but don't quite know what's the financing to be able to gauge how they can capture those opportunities. Because this is what I know. The real estate investor who is good at their craft, whatever it is that they're doing in real estate, they understand and appreciate that they are not the master of everything. What they're good at is finding deals, examining deals, doing the analysis. And where I come in is I will assist them with finding the right creative financing tool that can help them to be able to really seal the deal and move forward as they continue to expand their portfolio, build wealth. So once again, this is Lorelia from the Never Lose a Deal podcast. You want to learn more about me. If you are new to me, please go to www.neverloseadealpodcast. There you will see several links of things that I have been able to help real estate investors do, how you could possibly learn more about me. So until the next video and podcast,